Good afternoon and welcome to the end of week review for this week. So this week we are trading five funding, you know, 5 day, fully. We don't lose any day. We don't have any holidays. That's an idea. And we are week 15, so we just wrap up the week 15, which is 15 right here. So basically, it's just the second week of quarter two. That's where we are at. Even though this week we have the CPI data, right? But next week we may have the CPI data, right? The CPI data this week. Yeah, on Thursday. We forgot. Yeah, this is the website from CPI is April 10, correct? Wow, we didn't pay attention. Somehow we forgot. We thought it's next week, but actually this week. So it's a very high impact news right there. No wonder, huh? No wonder that here's the daily time frame right here. So we have the Thursday right there. So the Thursday is just reverse right there. So this is the last Friday right there. For this week, the weekly profile is this candle right there. Yeah, so it's open right here and then it's closed up there. But we can see the pattern right there for this week. You see that it tests from below, it breaks and it tests from below twice at this level. Here's the weekly level right there at 52.05, and then boom, it reversed. And then this is the reversal on Wednesday. So the huge move before the CPI come out. So maybe the market maker know the CPI data ahead of time. That's the reason why they inject liquidity for that matter. And then beautiful right there. So it's expansion, basically expansion. But right here we see the reversal right there, reversal. And on Thursday, where it's released the CPI data, then it kind of retracement right here. It rate the high or the buy liquidity right there. And on Friday, it looked like it's gonna be continued because you see that it tests from above. Then we thought, okay, break, it takes from above and reverse. That is a type 1 reversal, but the reversal did not happen. So basically right now it tests up from above this level twice. So let's see how the Monday. If the Monday break, then we're looking for it gonna retest this. Very interesting right there. So that's the level. It's at the candle range right there from last Friday. You see that candle range right there. So basically this week the price fall into that range right there. The minute it go above that range, it reverse. And Friday, which is yesterday, is closed within this range. So very interesting to watch this range from 54.35 to around this level, yeah, 50.76 and 54.35. So 50.75. All right, and then right here 54. So it's almost 900. Is that 900? Let's see. Is that 900? Almost 900. What do you say? 300. Okay. So it's about 300 point right there, or 300 pip right there. Pip point right there, right? Yeah. Wow, that's a big trend right there. Anyway, we want to see that, this week is CPI data, and then next week gonna be week 16, which is right here. So we just have a non-farm payroll last Friday. I keep that in mind. And this Thursday, normally it's gonna be on Wednesday, but we don't know, for some reason it's released on what? It will be on Thursday. Let's see what the next time is gonna be on May 13. We're gonna fall on May 13. Oh, sorry, we forgot. It's right here. That's right. So we are in April. We mixed both. I think we look at the wrong month. So right here, April 10. So April 10 right here. Yes, it's Thursday. Thursday. All right. Then the next week is gonna be May 13. May 13 is right here. It's Tuesday. Wow, very interesting, huh? Somehow we thought that the CPI gonna be on Wednesday. But this time is, this time and next month a little bit different. March 12th in February. March 12th February. Yeah, you see it's Wednesday. Yeah, I don't know why this month is fall on Thursday. Very interesting. And then next month it's gonna be on Thursday also. But anyway, that's it where we are in terms of the calendar. So we are in week 16, the second week of the second quarter, and we see that here's the setup right there. So test from below, break, test from below twice, and reverse. That is the type 1 reversal. Let's look at type 1 reversal we have. So here's our playbook or pattern or model, whatever you call it. But the idea that we observe, we see that there are two types of reversal. Type 1 is on the left and type 2 is on the right. It's very common. You look in the chart, you can see it's on any time frame, you can see. But if you practice in the low time frame, it will help you to see the pattern forming in the higher time frame. Either way, you can use the high time frame to give you the direction in low time frame. And in the low time frame, you can see when the high time frame gonna be manifest itself on low time frame. So it gives you both ways to look at the pattern right there. So in the top we have a short setup, and in the bottom we have a long. So we organize in the way that's very simple to understand and to memorize. So the more we practice, the better we are. It's like, I think Bruce Lee once said that it's not that you know 10,000 keys, but it's you only know one kiss, but you practice 1,000 times. That's where you become very dangerous right there. So that's our philosophy. Just pick up one setup or pattern and then keep practicing until we become very dangerous. Alright, so we see right here. So that's the short setup, right? It breaks, tests from below, and then it reverses. The test from below, it can be happen more than one time. Normally you see it one time, but sometimes it happen 2 times, even 3 times. But the more it tests from above, then the next move, the reverse move, is very fast, very furious. That is the phenomenal. Basically, the more it traps liquidity, the better distribution move it become very fast and furious. The same right here for long setup, right? Break and test from below and reverse. The test from below can happen many times. So in this case, we can see that the test from below happened twice. It happened on Monday, Tuesday, and boom, you see the huge move on the reverse on Wednesday this week, which is completely take over the range of the candle right there. And the guy on Twitter or on X, he is talking about candle range right there. He basically go after ICT. But anyway, the idea is there. It's the same. It's not something new, but the idea that, I mean, we should give him credit. He emphasized this. So, but anyway, it's right here. You can see it set up the range, and you can see that there are another level, high level on a weekly level right there. Right, it's we call it ping right there. Yeah, it's the weekly level. You can see that it starts from below. It break the level on last Friday. That from below. Let's put that side by side so we're on the same page what we're talking about. So let's pull the weekly. So basically we have the weekly right here on our right side, and then we have what? We have the daily on our left side, the daily right there. So basically you see this candle right there. Boom, that is your weekly. You see that, how it formation, beautiful. Yes. So we have 5 day right there, and here's your candle. That's the level. You see the amazing right there. So that's level right there, 5509. So we have to somehow make it a little bit there. Can we bring the level up? Hold on, let me figure out how we bring it up so it can match the level right there. Alright, so we have now figure out how to match, and you see that the level right there. That's how the weekly candle formation right there. Let's delete this for now. Okay, so we can see that right there. And so how beautiful that is. You see the level from last week, right? You can see that how it formed. Let's see. Yeah, you see that? That's the level that for this week. If we pull out, let's see, right there. So basically we have the level perfect match flash right there. So this is the Monday. The Monday it tests from below this level, and Tuesday is same, and then Thursday, Wednesday, boom, and then that is where it make the high up here, and then you look on the Thursday at the minute it rate the high, which is buy side liquidity, boom, it's retracement. We call it retracement. It's not reversal. Reverse, that means you have completely take over this candle, but it did not. It did not. So this is just retracement, and here's another retracement. It's very tricky right here. So let's see how is next week gonna play out. But this how this week the candle formation. So basically it's the weekly, and it manifests out in the daily. See how beautiful is that? It opened right here, right? It's opened right there. It is whipped right there. You can see how in the 15 minutes it goes right here. It opened right there, and then it go low. Yep, and it break that level right there at okay, on Monday break, and then reverse back at this level. But at low level, at lead level, you can see is it test from below, it break and reverse. That is the type 1 reversal we're talking about. Break, test from below. In this case, it does twice on Monday and Tuesday, and Wednesday it's reverse. See that? So this is one of the weekly profile we can see how this really form right there. Yep. And you see that the Friday is completely in the range of the Thursday right there. It did not break out of that range. All right, let's take screenshot so we can have a weekly profile for this week with 15. All right, so we take screenshot with note right there. So with 15 right here is weekly, and you see how Friday is manifest itself right there. I think we better take one screenshot with the last Friday right there. You see the Friday. Wow, that's the Friday. Ooh. All right, this one we give a little bit context of the last Friday range. So how it manifests itself right there on the weekly right there. So last Friday is the huge show up. But this Friday is not it's just a retracement and it stayed within that trend right there. Let's see how it's played out this week. So right now, next week, we see that it break the level, right? You see that? Break, test from below twice, reverse, and now it tests from above 1, 2. All right, so we give it the benefit of the doubt that it's gonna be rolling next week. Because after it breaks to the upside level, it tests from above twice. This guy's supposed to be breaking level. Yeah, at one point on Friday, we thought that it's gonna break that level again. It looked very scary. We will see. We take a screenshot. We see it. Oh yeah, we didn't go into. We just record 15 minutes. We did not record on the dailies, but you can see at one point. We thought that it's gonna be test from above and reverse, but it did not turn out that way. Look at where is level 52.05 on the 15 minute. Right here. All right. So So on Thursday, you see that it break that level and then it reverse. Oh, so it tests. And how about Friday? Yeah, Friday right here. It did test a level on the Asia, and then on the London, it never tested that again. And when it go to the 930, the New York, it never touched that level again. And we can see a beautiful setup right here also. So basically we see a fall breakout right here around 11:15ish. And this is the pattern that we're gonna talking about in the next talking point we're gonna do right now. So basically we see that next week it can be rally, especially at this level. You see right there, this level, it break reversal. If it come back to that level, then it may this level, yes, right here is you see this level, it tests from above twice. So what is the high of this candle? 52.86.50 right there. So this is our daily. So give them some color code. Yes. So we see it test from this level twice, test from above. Break, test from above twice. Let's see next week. Right here. So test from twice, but it will 5120. So that's a 5120 right here. No, we want the 5286 right here. Yes, so it tests twice, Thursday and Friday, right? Thursday right here, it break, and go up, break, go up. So it tests in the low time frame. You see that break one, break two time on Thursday and Friday. 1, 2, 3, 4, 5. Man, it do 5 times on Friday at that level. Wow, that means that you see that. Oh wow, that's the setup. You see right there the setup. Wow, that's the beautiful insight. We did take the trade right here, but we didn't let it run because we know that this is a perfect setup to go along right here. If you draw it out, you see this, mark this candle range, you see that level, break, start from below, reverse, and then break again, reverse. So the takeaway for this week profile is that the expansion move for the week happened on Wednesday. Yep. The expansion move for this week is happened on Wednesday. Yep. So expansion on Wednesday. That's the note we put right there. The expansion move happened on Wednesday. And the test from below, the setup or the consolidation is happened on Monday and Tuesday. So you can say consolidation or liquidity engineer, whatever consolidation. In this case, is test from below twice. It's on Monday and Tuesday. The week before that, which is last week, week 14, we see a different profile. Right? Here's the profile for last week right there. So right there, you have a Monday and Tuesday, and then boom, you have a Wednesday. It's nearly not expansion, but you see that it kind of first leg down right here. So it's first leg down, retracement, and then boom, expansion. But for the sake of the week by itself, alright, here's how last week it moved compared to this week's. The Monday and the Tuesday also consolidation or retracement, or it set up liquidity or engineer liquidity, and boom, Wednesday it make a move, but it's not a huge move, but it gonna be, the big move is happen on Wednesday, on Thursday and Friday. That's how it manifests itself in daily time frame, but on the weekly it's huge downward candle. But for this week we have where's our this week we have something a little bit different, right? We also have the Monday and Tuesday is the setup, and then boom, expansion happen on Wednesday. Last week the reversal come from on Wednesday also. This one Wednesday give the signal, but the huge move is happen on Thursday, and the big expansion to the downside on Friday. Basically the last two Friday we see the huge expansion right here. Right, that is the weekly. So it's right here. It tell you some story right there. It's a Friday and this Friday, but this Friday it no longer sell off. It start reversal. So give us some signal that that the reversal is already in the place. So it can be bullish next week. That's the things. That's our belief right there. So the note is that for this week the expansion move on Wednesday, but for last week the expansion happened on Wednesday and Thursday. Alright, another point we try to make is right here. We see the monthly setup and we completely missed the move. It perfectly fit our setup. But I'm glad that we see this so we can get ready. So here, at the end of the quarter, we should do a review and we can see right here, we did have that, but we didn't have a chance to do the recording, but let's take a look. So here's what we notice right here. We see very interesting. We compared, I think, the concept that ECT say about smart money technique or smart money reversion right there. In this way, in this screenshot or this chart, we compare between the NQ, which is a NASDAQ, and the S&Ps, and we can see there are diversion. That where it signal that sell-off start on Q2. And you can see that right here, the NASDAQ make the higher of the year on December, but the so you have January on February. So on February, look right here, you have February, you see that on the NASDAQ it make a low or high right there, but for the S&P it make a higher low on February. You see that? That signal to us that the diversion or the reversal is in place. And if you look the closer right here, you can see that is the signal of the reversal types 1 that we're talking about all the time. Right here, let's make it yeah, right there. What do we see? What do we see right there? The high, this is October. It's October 5807. So it's a 58. Oh no. No, 59, 27, 25. 59. 27, 25. Yes. So basically we have break. It break in November and then it tests from above. How many times? 1, 2, 3. Just recall what we're talking about. Our setup right here. Breaks and test below. I mean test above. In this case, short setup right there. Test from above. And like we say, the test from above can happen many times. But the more time it tests, the bigger and the fast and furious the real reversal can happen. That's exactly happened. You see that? It's so. You see the sell off huge in February. Is that right? February, in March, and now in April. So the January and the February, it's just consolidation and set up liquidity. Same for the last month of last year, which is December. Touch from above right there. So that's the point we try to make right there. So now we can look at high time frame. We can see what direction give us a more perspective right there. So beautiful. We don't need much at all. Just follow the setup right there. We can see that how it's formation and give an idea. And then right here, we can do all kind of setup. If we buy option, buy the put. After November, you start by the put option right there. And as soon as you see the diversion between NOS, DOS, then boom, you put all in. And look at that. Huge expansion right there. Yeah, so that's one of the points we try to make right there. So the high time frame gives us a lot of information, so we don't get lost in the detail. We don't have to get lost in the low time frame. So basically on the monthly, we can see that this is a reversal, type 1 reversal right there. That's right, type 1 reversal. Yeah, it's type 1 reversal because we see that first it break on November. So what's that? It's a break it. It happened on November. And then you have a second step, which is test from above. In this case, it do 3 times. 3 times, you have December. And then you have what else? You have January, you have February, and then boom, March is reversal. And by the way, we have also the and also we have a smart money diversion between NOS, DOS, and it gives us a lot of confirmation right there. So it's the beautiful setup, and day by day we learn much better. So now we see that the monthly give us a very huge perspective, because the big player, the market maker, they don't look at the 15 minutes. The investor, they don't. They go by quarter. They go by month. A quarter is 3 months. So basically, they accumulate liquidity for last 3 months right there. On the first quarter, they accumulate sell side, right? They build up sell side for February and for January and February, and boom, March they expansion, which is reversal right there. That's and the level is right there. The level set up by the high of October. Can you believe that? It's so accurate right there. So accurate. Basically, we have a so-called 4 breakout reversal. Yeah, we put a level right there at 59, 27, 25, which is October high right there. Right, October high. We're very surprised. Normally October is a Dow close. It did Dow close, but then boom, you see that, and 4 breakout reversal at and it happened in March right there. So we read both the price level and the time. In this case, is the month. And note that the test from below, test from above 3 times. And also we have a smart money diversion, smart money technique diversion. Yeah, diversion happened yeah, between a notch dot is diverse. Happened on February, right? On February, the S&P's right here make a higher high, but the Nasdaq make a low low. So basically, the Nasdaq make a low high versus the S&P make a high high. That's two signals that give us a big, a beautiful sell-off or expansion or reversal in the outside right there. Let's save this one. All right, so basically we put it together and it's a 4 breakout reversal, and then we have another confirmation, which is smart money diversion in March. So we know that the March going to sell off right there, the whole month. So that's how big money or market maker they trade. They trade on monthly or quarterly, not 15 minutes times time like we. But if we understand liquidity on high time frame, give us a better chance to go with the flow, go with the liquidity. Otherwise, we become liquidity for markets. So we don't want to be that. We want to go with the markets. And how we do that? Look at the monthly. It's so beautiful and build up. You see that? You couldn't ask for better setup like this. Taiwan reversal right there. For breakout. Oh yeah, we meet. Hold on. Right here we need to say type 1 reversal. Let me fix that. Alright, we just fix it. We put a verbiage right there. So basically, oh wow, very interesting right there. So right there, so it's breakout, we give the level, which is October high, and the reversal type 1, the time. So we have the price and with the time, is it, in this case in March, right there, this year. So test from above 3 times right there, boom, then it reverse. And we have a confirmation right here. Right there, we see the February there, it make a lower high, and right here is make a high. See that? Make a low high, but it's what a high right there. Yep. Let's put a note in here a little bit. Yes, so we add the verbiage right here. So basically in February, the Nasdaq make a low high. So it topped in December. For the S&P, it topped in February. So it made a high right there, but the Nasdaq is on February make a low. So that gives us the confirmation right there. So it's a huge setup. So whoever short in March make huge money. And if we follow the setup next year or this year, we're gonna make huge money too. You see that's how liquidity build up or entity on high time frame right there. So let's see in the daily. You see that when what day in March that it really show up. You just start begin February, the end of February already show up, and then you see right here the 28. Basically the Friday, if that 28 is Friday, let me check real quick. So Friday 28, yes, Friday. So the Friday, all right, so we see that the Thursday already saw a break this level, right, T level right there on the monthly, and then boom, the Friday it kept reverse. So it tells you that the real breakout gonna happen. Test above, break, and reverse. That is the type 1 now the type 2 reversal. But look for the next week, which is in February. It gives us in March, boom, we break the level. So that's where the sell-off start in March. And now at the end of March, right there. And April, boom. So it's just 2 weeks April also. The neck laid down right there. That's amazing how it manifests itself right there. Alright, so we covered that, and now let's go to the next topic we want to cover for this recording and a week review. So the next topic we're going to cover that around. You remember we're talking about the Judah swing 930. This week we have some setup, and also we find out another setup. Is this setup, which is the consolidation around start from 9:30 to 2 hour. It around 11ish, 11:30ish. That's the consolidation, and watch for the bigger move after consolidation, which is the expansion. Yes, that's the model we want to do this. So basically, we break down in two scenarios when we need to do the Judah swing and when we not do Judah swing. We wait. When it's consolidated, then don't jump in, because we're gonna blow up our account. We blow up our account so many times on this setup because we don't recognize them. We mess up with this Judah swing. All right. These two scenarios have a let's come with the word. Let's come myself. All right, there's two scenarios in here. Yes, so be careful. All right. Sometimes we thought that the scenario one is the scenario two or the setup two, so we scared. We don't go in. Then we make the big move because the 930 is the only Judah swing and it reverse. And then when it go into this scenario, we mistaken with after the 930 move, right? We need to go in, but the minute we go in, we get top. We get our head top. So it's very critical for it to break down two scenarios. And we just find out this week. It takes time to learn, so just be patient with ourselves. All right, now let's go into this deep dive into this scenario, help us to better understand the liquidity and when to trade and when not to trade. That's the whole idea. All right, before we go to the daily 15 minutes setup, let's revisit this one. Right, this one we call is the monthly setup, but this monthly setup fall into a very specific month, which is October. Remember, October and March is one of the critical or very key month of the year. So we write a little bit script right here that identify all the October. You can see that. So this October high for last year is set up a 4 breakout for this year right there, reversal 4 breakout. And look at this October, the October from the year before that, 2023, right? So the high right there, as soon as December break that high, November break that high, you see that it continues to rally. You don't see the setup for the reversal. But you look at this level, you can see the October tell you that it's gonna reverse, because you see that it tests break and tests from below and reverse. So October is a very key month. Give us how we're gonna break away. You see that right here, it break the October but then it reversed back right away. It never touched from above. You see that? It did touch from above one time right here, and then boom, it go. It gives us a very good indicator. Follow the last quarter and the next quarter of the following years. That's right. October is good. I mean, similar right here. Wow. Similar like the setup right here. You can see that October high, it break, right? You see that? It break and then it reverse right there. It not test from below, but it reverse, and then it test from above, but it test from below, but it keep the idea right there. So it tried to break and then it fell, boom, it go down. So right here is the long setup. You see that October test this one, the high, test from below, and give it an indicator it's gonna be reversal. Yes, so look on the monthly and identify October, give us a lot of clue. Lots of clue, my friend. Yeah, that's the one point we try to make right there. Wow, what year is this one? 2008. Wow, it's a long time ago. But to see the October right there, huge show off. And you mark the low, you can see the reversal right there. What do you see? You see that is break and it tests from below and then it reverse. It reverse, and look at that. For that year, when it hit the high, it retracement, and then the following year, October right there. Give us some idea. Wow, it break that level. That's October, and that's October is kind of overlap right there. That's, my friend, remember, we call it October playbook right there. Watch on the monthly October, give it the whole year right here. Similarly here, we see that that's October test stick level above. You see that? Test from above and boom, reverse in November, and then have a little bit retracement and boom, December is sell off. So what year is that? 2007 right there. Wow. Yes, so that's the October supply. Because the October is very interesting month for some reason. It either rally or it either sell off. It gives us a lot of clues. So just mark the high of October, give us a lot of clue right there. We're gonna go a deep dive on October playbook later, but for today we briefly gives you the idea right there. Okay, now go back to this setup. All right, here's the 15 minutes for this week. It start Monday and then finish Friday right there. Let's take screenshot. So for our brackets, we'll take screenshot real quick. So this is week 15. All right, so in this week, Monday, we see the Judah swing beautifully right there. So you see the Judah swing at 9:30, boom, and then it reversed. See that? But the trick for this Judah swing that it did not sweep the low of Friday, which is last Friday. It did not sweep the low at all. That's right, it did not sweep the low. But it have a gap right here, the gap down. It gap down. Right? If you look, let's look for 10-day. You see the gap down right there. Yes, the gap down. So whenever I see the gap down, then looking for a Judah swing at 9:30 and run away from the gap and then boom, reverse fill the gap. That's right. That is the signature of the Judah swing at 9:30. I think ICT did have that model. Let's take a look. So here's the ICT model that Judah swing at 9:30. Right there, 9:30. You have a gap right there, right? Gap down in this case, exactly. And Judah takes sell side liquidity. But in this case, it does not take. If it take, then it will very high probability or high reliable, very reliable setup. But in this, that is the Judah swing right there. But in this case, it did not, right? And it happened on Monday. It did not take the low of. Oh yeah, it did. You see that? No, the 9:30 did not take the gap. The opening gap on Sunday already take the low. Already take the low of previous day. So it does not wait until the 9:30. So it happened before 9:30. So that's the whole idea right there. So if it happened from already happened at 18, so that means at 9:30 we don't need them. But it's really swing right there. It really swing. And you can mark the candle after expansion right there. It gives us also clue. So it break this level, there's no reason to come back here. All you do is come back here just to reverse. So this is the Judah swing we're talking about right there. So whenever we see the 9:30 open below, right? It's open, is that below? Yes. It's open below the 18. That's where we can expect this scenario. Yeah, we have to identify the condition so we can engage. If the condition a Judah swing not there, then we better wait. So that's the whole idea right there. So we have to have the open 30 below open at 18. Right? That's been the overnight open, and the 9:30 open, New York open is the overnight open right there. So you can say overnight open. Oh, you open overnight. All right, that's the open overnight. Below, that's right. Below, and another consideration is gap. Below or above, is below or above and ready for the Judah swing. 2Ks above, then you have a gap up or you have a gap down. In this Monday, we have a gap down. Yes, so what does that? Let's put the hyphen right here so it will not complain. Right, you have a gap up or gap down. That's the condition that we say, wow, you will ready to engage. All right. If you don't see the condition, then don't engage. Okay. So what the condition right here? The open 9:30 is it's at around, yeah, it's just around at overnight. Then and also what the open 09:30 is, if it's in the range, you see that it's in the range of the London Open, London range. All right, it's in the range of London range. In the range of London range, a little bit repetition right there, but just go with that verbiage right now. Okay, so look right here. We see that phenomenon here on Friday. You see like that? It's open just around where's our 9:30. Okay, 9:30 right there. It's open just around the open. You see that? Yeah, just around there. See that? That's 18. It's open around right there. That level. And also it's in the range of what? Of the London. Right? So then don't go engage right here. Right? Let it play out. And then engage right here another 2 hours later. You see that? That helps us a lot right there. Let review. You see, so this is a Friday, all right. And now go into this is a Thursday. We see a completely story right here at 9:30. You see the Dow close right there, and the open is way below. See that? It's open below, so we can engage. We don't have to worry about consolidation right here. So right here, if we see that there's something right here, give it indicator. Yeah, so right here is break below there. We see that already the lay down right here, huge gap right there, and try to retracement right here and right here. The 8:30 give us some idea. I think what happened. Oh, the 8:30 we have a CBI data, and you see that we mark that level. We see that the 8:30 break that level, and this guy it tests from below. Right, it's supposed to reverse, but it did not. And this guy is also try one more time. It fell, and then boom, it's the leg down. So on 9:30, we see that it's not a euro swing at all. It's not a euro swing, but it's also not in the condition that it's gonna be a consolidation. So basically, we avoid this. If we can recognize the condition, then we just seek away. When this condition is not there, then it can be the euro swing, or it can be a next leg down. Right? So that's three scenarios right there for us. Yes, the easy one is euro swing. The second scenario, when this is not there, then we have a third scenario. Yes, so very smart. It's gonna be a neck. So right here is a reversal, a ruler swing and a swing. A reverse, but here is the continuation. So basically, at 9:30 gonna continuation, which is neck. It's gonna be neck leg down or neck leg up right there. Right, that's expansion, basically expansion. Beautifully. So when the absence of this, we have two scenarios right here. These two scenarios. Whenever we see this condition, then wait for 2 hours. All right, that 2 hours is pretty. 2 hours. Waiting. No trade. That's the whole idea right there. Avoid that. If you see this condition, all right, then not engage. But if this condition is not there, then let's see if it's gonna be a euro swing or it's gonna be continuation. And if you don't see the euro swing, you don't see the gap down, then get ready for this scenario, which is perfect. On Thursday, we don't see right here, right, 9:30. It way open below the 18, and it's already, what else? Yeah, it's open. It's not in the, yeah, the range of the 930 is below the London. Right? The 930 range is below right here. Yeah, the 930 range. Yeah, let make it more. 0930. Yeah, not the open. Let's make it, yeah, range. Right, the range already is in the range. Yeah, is within. Yeah, let's say is with overlap, but is it inside candle? What? Yeah, it's within the London range. All right, so that make it more precise. All right, so that is what we see. That is what we see for Thursday right here. So basically, it's a continuation. Right? When you don't see the U.S. swing condition, right? Like gap down, gap up, open. This is open below. Yeah. But it's not take out the high of previous day right there. Right? And yeah, the condition, another consideration that prior day low or high, or Friday BM, okay? Either of them should work. It got rated, right? It got rated, then that considers for you to swing. But on Thursday, the 930 range, it did not rate the previous day PM right there. We see the huge swing on Wednesday expansion, and the 930 it did not rate anything. So that means it's gonna continue. Right? Why it's not gonna be a cancellation? Because open below. Yeah, open low, and also the range of the 930 is far off of the London. If it open around here, then give us some idea that it's cancellation. But otherwise, it can be the continuation, which is the next leg down, because the London already the first leg down right there. And yeah, but actually the high of the previous day is equal rated. See that? Oh, so it may be that condition also in the continuation right there. But let's keep that thought in mind for now, okay? So that is the condition. So here's is the Wednesday. All right, let's look at the Wednesday. What do we see at the 930 right here? So the 930 is right around the 18. So what else? It tells us, boom, you see that? Around 2 hours. Wow, exactly. At 8:30, you see that? Don't engage. Yes. So look, that's exactly around 2 hours right there. In this case, it's 15 minutes, 2 hours, boom. It goes. So don't engage right here. If the 930 open between the London and also in the 18 range, then don't engage at the 930. Wait for 2 hours right there. So it's perfect right there, described right there. That helps us to avoid trading in the first 2 hours, 2.5 hours in here we can engage. You see right there, you can see the test from below breaks. You can mark at the level. You can see that the pattern right there. So it breaks, test from reverse. That is a type 1 reversal. You see that? You marked. Let's mark this right there. Okay. You can see right there. Yep. So the 930, yes, the 930 right there, and you see the 1055 break that level, test from below, break it, and then reverse and test from below right here. Break and test from below and reverse. That's type 1 reversal. Yes, that's the type 1 reversal right here. Break, take from below, reverse. You saw it right there. So basically, if the 930 open right within the range of the London and at 18, then avoid. Don't engage. Do not engage. All right. We do a detail on this, but let's go for that for now. Don't engage. Avoid them. That's where we blow up our cow. Don't engage them. And then boom. Wait for another 2 hours, 2.5, and see if any setup. Beautiful setup right here, the long setup. Type 1 reversal. 4 breakout, type 1 reversal, and boom, engage. The third scenario, the continuation, is a little bit tricky. We have to take more time to study and observe. In this case, it's continuation right here. A little bit tricky. We have to see where it's gonna break. Make a second leg down. Second next leg down, or gonna be a next leg up. We have to observe. But in this case, you can see that right there at the 930. Don't engage, but you see it break and reverse. There's no way it come back. The only one come back it reverse. It's gonna be make the next leg down. I think we did take the trade right here. Yes, actually we're looking for a second leg down right there. I think we run out of time, but let me show you that we did take the trade right here, 45, and it happened on Thursday. Okay, let's take a look. All right, so here with the screenshot we take at 9, and we look on the. By the way, we do the study on Thinkorswim, but when we trade on Top Step, which is the U trading view. We take a challenge from Top Step, and they don't have a Thinkorswim, so to go with the trading view. So here's the trading view on Thursday. So the question for us is on Wednesday, we're going to go in, we see a huge expansion, and we mark right there to see if it's going to be reversed from this level. And here's the beginning of the day. It looked like it's going to break down to the level. There's a neck leg down right there. Exactly. And here's the 15 minutes at 9 o'clock right there. So it's going to be, we marked the day before that level also. So it's going to be a second leg down. So yeah, we try to short right there. And then did we try to go long right here? We short again. 40, so it's 10 minutes, right? We try to short them. Boom, see that? Boom, we short them. Yeah, that's right. 30. Is this? Yeah, Thursday right there. Boom. Wow. So let's go back here. On Thursday, yes, that's the 9:30. We did take that short and get an awesome profit right there. Okay, so then we go back to the daily. We see, all right, it break the level. It may go down here, so that we take. Let's see that after the 9:30. You see that it did take the low of this candle line right there. And did we go short right here or we go long? It's hard to tell. We short them. Okay, let's see. Okay, we short them. Oh yeah, we should take profit, but we did not. Then I think. All right, so we short them again. Boom! Wow, good trade right there. And we go back to the daily. We see that it retraced. It retraced a little bit. Let's see it go back to this level. All right, so we see that right there. You see that the test from below and reverse. That's where we think that it's gonna type 1 reversal right there. And you see if it hit our target. It didn't. Oh yeah, it hit our target. So we catch the move right there. But don't go long from here. Yeah, because you look like alright. It's a it's gonna be reversal from here. So don't go long from here. That's the tricky right there. Because you follow the momentum right here, it's gonna be tricky because it's gonna reverse right away. How do we know that? Because it's not gonna be a euro swing. All right, it's not gonna be euro swing, so don't go in. Yeah, we know as soon as we saw this, we know that it's gonna make a second leg down. So we go in. We short them. Yeah, we short them. Yes, yeah, beautifully. See that? Yes, that is a beautiful trade right there. Because in the past we jump in, we go long, but we learn our lesson. Go back. Yes, in the past we're gonna go long right here. We thought that okay, it reversal from here, but you know why? Because I think that there are lots of. Oh yeah, one of the reason. We see right here, what do you see right there? It's the higher high. That means it tracked the sell side liquidity right here. That means it engineered the sell side liquidity in order to what? In order to make a neck leg down. So right here you can do a what? You can do a type 2 reversal. Break, it gives us test from below, break and reverse. That is the type 2 reversal we're talking about right here. See that? Test from below, break and reverse. That's what happened right there. Break, test from below twice, break and reverse. And look at the time. What time? It's going to 10:45. Yes, watch for the 10:30 and 10:45. See that? Yes, beautiful trade. You see we make any mistake? Yeah, all right. Okay, so we go in, hit our targets. Oh, it did not hit our target, so we just take profit and get out. Okay, so now we go down again and we go short again. Boom, we hit our target. If we let it go, it will really go down. So, but anyway, we take quick profits, hit our target. 3R, right, 15 point. And then we go back, we look at the daily, we say it hit that level right there. That's amazing. Yes, we should let the trade we took right here. But anyway, if we should let them run, right? That's huge for us. I think we what we do right here? Oh, we did wait. Are we? Oh, we wait. Oh, what do we do right here is we go long. Yeah, we go long. Boom, hit our target. And good. Yeah, we did wait into the PM right there to go long. Wow. 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 Okay, so right here, that's a good try to go long. But it didn't hit our target, so we when it see it retrace, we take profit and we get out. That's the Thursday. Yeah, and then we stop. We stop for the day. Yes, we're beautiful right there. Yes, we come out. It didn't hit that. You see, it come back, but eventually it hit that target. But a loss of retracement, and you don't want to sit through retracement. Yeah. All right, let's wrap up here. Thank you for your time and interest. We're always grateful for the opportunity. And day by day, little by little, we're getting better and better. We do what we love what we do, then success coming our way. Have a great weekend and see you next week.